Apologies about that stream that we had earlier on. We had some challenges with the internet. The internet was a bit slow, so we couldn't upload as fast as we wanted. So we keep on keeping an eye on the speed that we are uploading at. So if ever we start to drop frames, then there's no point continuing with the live stream, because it means that we are not pushing anything to YouTube. So now for the people that were here that are no longer here, they will join as time goes by. But as you will see, the video is always going to be there. If you have any questions, just write them, the questions, in the comment section. Then I will look at those charts for you and then respond to your questions. At this moment, no one is watching live, so I'm just going to continue with this thing until somebody joins, right? And since it's going to stay there on YouTube, then I might as well just go ahead and continue with it as long as it's working, right? So now at that time when we lost connection, I was talking about CF. So we said that CF, it's another fertilizer company. It's a US fertilizer company. I was just trying to overlay CF over Omnia to just show you how, as you can see now, the gap between these two companies. If you compare just starting somewhere in 2017, CF has risen by over 200%. But when you compare it with Omnia is down 47% or so. But that is because we are looking at a very long time frame. So let's start somewhere around 2018. Even if we change to 2018, we can see that CF again is up 142%. And Omnia is down 33%. Remember that the reason why Omnia is down by this much is because it fell a bit then before consolidating, moving sideways, and then it only starting to recover here. So that is why there's that large discrepancy between these two stocks, that minus 33% and that positive 142% from CF. CF, it's an American company. Okay, so now that now we know that the fertilizer companies and also other chemical companies in the US are doing well, then we can trade Omnia with confidence, knowing that, or expecting Omnia to continue to move further up, since the other fertilizer companies globally are moving up. We mentioned that the reason why we are bullish on this stock, among other things, is because of the fertilizer shortage due to the rising tensions in Ukraine and Russia. We said that you can set the stop loss somewhere around 55 Rand per share, and we noted these trade levels to say that the stock can go up to about 80 Rand per share, or it can even go above 100 Rand per share. But we are not making a prediction. We are just doing this so that we can show you the risk to reward on this particular stock. Remember, we always encourage you guys that whatever amount of risk that you are taking, you should think about the amount of money that you can potentially lose, rather than thinking about the potential money that you can make there. So as long as that is clear, then it's fine with us. We are happy with that. So let's move on to another stock. Let's see what other stock I wanted to cover. Okay, I spoke a bit about Merafe Resources. So with Merafe, we said that this coming Tuesday, Merafe Resources is going to release a result. We just saw on Twitter there. I think it was Greg Davis that shared that nice paper screenshot. So Merafe will be announcing their result this coming Tuesday. Even though we are bullish on Merafe, we said that the announcement can come before the stock market open, meaning that by the time the stock market opens at 9, some orders will already be there. So don't just rush and try to buy Merafe before the announcement. It's better to wait to see the result, what the results are saying, and then when the stock market opens, look at how the market react to those particular results, because what if the results are bad and you already have a buy order which is going to be triggered, and then you're going to be sitting in a stock that is losing you money, at least for that particular day. Obviously, the other side of the coin is that if you have an order there, you can see that if the market breaks above certain levels and you're already in that particular position, then you'll be able to benefit from that. So let's look at the Merafe chart, because now that is where the levels that we want to talk about. We shared the chart on Twitter on Friday to say that Merafe is approaching some interesting level. So when we zoom out of Merafe a bit, we pointed some levels there. Okay, now it's showing me another MRF, not the company that I'm looking for. Let's see. Okay, yeah, now we have the correct stock. If you zoom out a bit, you can see that Merafe is now approaching some key resistance level. When you look at these previous prices, somewhere around 2 rand. So whenever we're trading chart, we're just looking at patterns that are repetitive. We are looking at the stuff that we saw previously, and then we see if that thing is going to work, how it's going to turn out at that particular time, right? So because of these previous levels, then we can start to see whether Merafe is going to come back and trade lower. If it trades lower, it means that we need to get out of whatever position that we have until a new uptrend is established. But in this case, we are not predicting that the results are going to be positive, but what we want to see Merafe break above this level and maybe coming back to retest the breakout level before continuing to trade up. But remember, we always mention that sometimes the stock just break above the resistance level without even a tiny pullback, and then it continue to trade high. So always think about all the potential possibilities that can happen whenever we see stuff happening in the stock market. So these are just 3 potential possibilities. The one possibility is that the share price you can just fire through, go above 2 rand per share, continue to move up. The other possibility, of course, is that the stock can break above and then come back to retest the breakout level before moving up. And then the other one, which we wouldn't want to see, is the share price finding resistance around this 2 rand level and then trading lower. So we wouldn't be happy with that particular setup at that moment. But we do have Merafe on our watch list, so we want to see what the news are going to say before we jump into this stock, right? Always think about your trades, plan your trades, and then whenever you see all these scenarios playing out, then trade that particular setup according to your plan. So that's all for the South African stocks that I wanted to cover today. So now let's look at the US stocks. As we saw that previously, the Nasdaq, we mentioned in the previous video that Nasdaq was under pressure, as you can see from this. For quite some time, Nasdaq was nice in an uptrend, and then it topped somewhere around 17,000 point before it started to pull back. Then it first broke below 16,000, which was worrying. By that time, we didn't have a position. Then we saw it coming back to break below this 14,400 points again. That was also worrying. And then we had this support level around 14,000, of which we saw Nasdaq break below that level. Fortunately, now somewhere around 13,000 point, it started to find support. So we noted on Friday or last week that there was this nice large pull, but this, because it's futures market, it does not have a volume, so we can't see what was the volume on that particular day. But the nice thing is that this candle for last week candle is bigger than the previous week's candle, so that tells us that that upward movement contains a bit of strength, and we are happy with that particular strength. It means that if there are buyers, then they can be able to push the price of Nasdaq further up. But this is just an index. What we want to see some tech companies recovering. If the tech companies are recovering, then we can also expect the tech index to recover as well. But if you look at the other indices in the US. This was Nasdaq. So if you look at S&P 500, which is SPX and the Dow Jones Industrial Complex, those ones, they were also on a downtrend for a while. You remember they were going up before they topped somewhere around 4,800 points. Then it broke below this level here. Then we didn't have a position, but similar to NDQ, we saw that the last week candle, it just dwarfed the previous red week. Fortunately, this one has a volume, even though the volume isn't high. If we compare this week's candle versus the previous week's candle, we're not saying that the volume should be neglected, but we shouldn't just make a decision based on what we see from this particular candle, right? So now from this, we know that the share price is already trading, or the price of the index, because this is a futures market, the price is already trading above the 200-day moving average. So when we buy this, we buy it with confidence, because we're expecting the price to continue to go up there as well. I'm not going to cover the Dow Jones Industrial Complex Index, because that one is less commonly traded. We're just going to focus on the ones that people trade the most, right? So now if you look at the individual tech companies, I mentioned that on Wednesday we bought Apple. Remember, Apple is still a tech giant. Well, we're not saying that it's not going to experience challenges in future, but it was strong while the other companies were falling. Then we've been trading this Apple for a while. We saw that it went to trade somewhere around 180 US dollars before pulling back to about 149 there. We were on a long position that triggered our stop, but we always wait to see where the market is going to come, if it's going to come back to that particular level. So now what we see here is that it seemed to have found support. Then we waited for the price again to come back above the 200-day moving average. Then we got back earlier on April somewhere around 159 US dollars with a stop loss at about 149. So that's a $10 risk that we are taking. Our short-term target, we are targeting the previous high of 180, but also we already have a buy stop order somewhere above 181 US dollars, so that if the share price close above that particular level, then we are able to get in that move if there is a move going or taking the stock further up. So we'll be happy if we can get that particular move happening, right? So that was the plan, or that was the play on Apple. As you can see, we already have this particular position there. I also mentioned that we took a position on Tesla on Thursday. So Tesla also showed a bit sign of strength. Then we quickly jumped in. Whenever we see opportunities, we try by all means to get in there and get a piece of action. Same play, we saw that there was a bit of a pullback. We didn't have a position on Tesla. We're trading these US stocks in our eToro account. So this is the first time we are having Tesla. I'm just trying to think what's the correct name. All right, I see now there are some people. Maybe I can then continue to show my face, right? So now we have a position on Tesla. First time we're having a position. We never had a position on our eToro portfolio. On our Easy Equities US dollar account, we trade mostly US stocks, US ETFs rather than US stocks. So that is why we missed up on Tesla as well. But well, just because we're not there doesn't mean that you can't take advantage of the opportunity at this particular moment. So now what you see, we entered somewhere around 850 something. I think it was 858 US dollars, and then we had the stop loss. We just wanted to exit if the share price came back and then closed below this price level, the price level that told us that the stock could be moving up there. Again, similar with Apple, we are just for now targeting the previous swing high, or the previous high of 1,200 US dollars per share. So that's a risk to reward of about 1:4. Let me see. Yeah, okay, it's about 1:3. Again, we always encourage people to take setup whereby the potential reward is much greater than the risk, because that is the only way that you can get an edge in the market. If you just trade for the sake of trading, well, that is why some people, they blow up. Well, in our early days, we did blow up a few forex account, but now that is why we practice risk management, because we know that it's not worth it to try and trade everything at once. So that's the play there on Tesla. Another position that we took on Friday is Nvidia. So we saw a lot of charts that were flying in our face on social media, on Twitter. Remember, we have a Twitter account. Some people, they communicate with us. Sometimes we follow some people there. So as you can see now, that candle is a bit larger compared to the other ones. That's because when all the other companies, they started to trade below the 200-day moving average, Nvidia was one of those few strong companies that managed to stay above this level. And then when it bounced back with a lot of power. The nice thing about it is that the candle as well, or the volume for that particular week, is high, meaning that it's buyers and institutional investors that are pushing the share price high. So we bought with confidence, and then because we don't want to hold the stock if it trades below the 200-day moving average, that is why we have our stop loss at 229. Again, we are targeting that previous high of about 360, but if it breaks above 360, we will have a buy stop order there, so that you can take or increase the position. Remember, when the market has been on a recovery mode, whether it was a pullback or it was crashing, you don't just jump back in and buy everything all at once. We have few testing positions. We just want to buy bit by bit until we are confident that, okay, when we buy, the trades are working, then we can start to pile up the position, buy more stocks, because the last thing that we want to do is to buy the dip dip that keeps on dipping. So we're always looking for opportunities that offer us at least a high probability for that particular trade to work. So that is why we are looking at that. Okay, so now let's see what else. Okay, I've spoken about Nvidia. So there are some companies, as I was searching, looking for potential opportunities to trade. So I just want to share with you some of the chart. Maybe some of you already have these companies in your portfolio, but this is AbbVie. It's I think it's a pharmaceutical company, but it really doesn't matter. What we want is to just make money from these companies. We don't need to know everything about everything. So when you look at AbbVie, we had previously highlighted that previous high, which was somewhere around 125, and then when it broke above this level, we shared the chart on Twitter, and it happened at the time it had a nice large volume. That's when we started buying AbbVie. As you can see now, from 125 we were up about $30 since our entry there, but now we see that there was that bit of consolidation there, and then there's this breakout. If you look at that candle that was formed, or that volume, the amount of volume. So whatever we have here at the bottom, it's volumes, it's not candles. Apologies for saying candles. These are the candles here, even though it's a bar chart, but if we want to use the proper terminology, this represent the candles there. So what we are going to do here with AbbVie, we are going to add into our existing position. Let me clear this a bit. So we didn't have a buy stop order here, and we're not expecting, well, it would be nice if the share price can pull back, because then we can have a buy limit order somewhere around 151. But at this moment, we're just going to buy a AbbVie as it is, because we're already sitting at profit, so we still have that cushion. Then we're going to set our stop loss somewhere around 145 US dollars, anticipating that AbbVie is going to continue to push further up. So that's one stock that is on our watch list at this moment. Let me try to get another stock that is on our watch list. So I looked for this stock. If you are using easy equities and you only have easy equities, you won't find this stock. But if you use eToro, then you are going to find this stock on the eToro platform. I've already checked, because, well, the reason why we have different platforms for trading the US stocks is because it's not we don't always have the stocks that you are looking for on either platform. Some of the stocks we find on eToro, some of the stocks we find on Easy Equities. So not all these platforms are perfect. Okay, so if you look at the previous breakout that happened somewhere around April, May 2021, again we're seeing the same thing here. This is another breakout level. Remember, we always say that we are just trading patterns that are repeatable. We don't really know, well, I know that it's an insurance company, but I don't really care what kind of an insurance company, what is it that they do, as long as it can continue to form this pattern, meaning that as long as it can continue to go up, I'll be happy to be a shareholder. I'm not interested in the business. I'm interested in the profit that will result from my enterprise and the exit profit, right? So we see another nice breakout here from AIZ or Assurant. And also, if you look at the amount of volume, it's a nice encouraging volume there. Again, as we saw with that breakout there was a nice volume that was accompanying that breakout. So we see the same thing here. So we also have that bit of confidence that, okay, the share price can push further up a bit, and then we can be able to profit. But what is more important is not the potential money that you can make. If you look at this candle, then you go back 1 week, you see we find this candle there, then we can set our stop loss there, just in case the stock market reverses and comes back. Remember, whenever we're doing chart analysis, we are not predicting where the stock market is going to go. We are simply looking at the path of least resistance, and then we are trying to profit if the stock market move in that particular direction. That is how we are making money in the stock market, not by predicting what will happen. Okay, so we spoke about ABV, and then now we are covering AZZ or AIZ Assurant. And then another stock, I know that some of you guys don't trade the US market, but we are sharing this because we know that there are people that we communicate with, people that trade the stock market, or the US stock market. Another stock that you are happy to buy this week is Anthem. I don't even know what they do, but on TradingView you can find the information about this particular company. It's nice, it's going on an uptrend. We saw some breakout in the past that have worked. We saw another breakout, there was a breakout, and then there was a retest, and then now the share price is pushing further up. So here we have another breakout following this small consolidation. So this one is nice. The price is still near the breakout level, so we can get a nice, well, it's not necessarily a tight stop because the difference is going to about $28 there. So that's the risk that we are taking, and then we expect the share price to continue to go up. But remember, if you don't want to take a large risk like the $27 or so, you can always, I'm looking at this in a weekly chart, you can always dial back and then go to a smaller time frame like the daily chart. Then you can have a bit of a tight stop. But remember, we always take into consideration the volatility. In this case, the volatility is about $14. So if you buy at this level and then you set your stop loss somewhere around well, let's just say $465. If the difference here is about $14, you already know beforehand that this stock is volatile by as much as $14. So if the stock go beyond $15, do not be surprised if your stop loss is triggered. But now I'm talking to the people that actually use the stop loss. I know other people, they have the attitude that if they die, they die. We do not trade that. But as you can see now, this breakout had a massive volume there. It's much higher compared to the recent or the previous average volume, and the stock is already trading after the dividend. The dividend was paid there. So we're just going to expect normal stock volatility, buyers and sellers exchanging shares, no catalyst pushing the volatility of the stock. And it's also nice if you have a stock that is moving up or down in a steady fashion, rather than seeing a stock that just crashes, because that can just undo all the work that you did when you were looking at that particular company. right? So now I'm just going to switch back to the weekly chart, because the weekly chart, it does give a bit of a perspective, and some of you guys are not full-time traders, including myself, so it's better if I just check the market once per week. Okay, so let's see what another name we're looking at, John Deere. So well, it's not John Deere. John Deere is the tractor, but Deere and Company is the company that produces John Deere. So for a long time we're waiting. Remember, we don't just jump into the stock market. We can actually sit on our hand and wait for the stock market to work. Once it starts working, then that is when we jump into the market to start buying some of the stuff that we always wanted to buy that we couldn't get for a while. So we saw now this is the range that John Deere has been trading at. Okay, I'm going to remove this drawing because I want to zoom in a bit down there, because now there is this belief. I was reading a book. The author of the book said that people, they trade their beliefs in the stock market, and well, if you believe that a breakout that is accompanied ideally by a large amount of volume, that breakout is going to succeed. It's not a fact, it's a belief. I believe in that, another person might believe in something else. So if you look at the range of this breakout, then other people will then expect that the market will go up by the same range. I'm just drawing, it's not the perfect range. So then we can expect, based on this, we can expect the share price to push by as much as reaching 520 per dollar or above 520 US dollars. We're looking at the New York Stock Exchange, and then it's priced in US dollars. So we see if we have a stop loss somewhere around maybe 380 or 390, then the risk to reward is somewhere around 1:4. Again, we are taking calculated risk. We know that the setup might fail, so we need to think about how much money we can lose before we can jump in and buy that particular company. Right, so in this case we see that okay, 520 is a possibility. We are not saying that the stock is going to go to 520. If it goes to 520, great. If it doesn't go to 520, at least we are not going to lose a lot of money. But I like this setup. The stock is available. Well, I'm not sure if it's available on its equities, but I have confirmed on eToro that the stock is available on eToro. So if you are using its equities, just go to the USD account, check them if the Deere and Company is available. If it's available, then at least if you want to buy it, you will be able to buy this particular stock. And since we started this streaming, because we were just testing, we were not sure whether the internet was going to work or if it was not going to work. Let me remind you that everything that is shared here is just for information and educational purpose. It's not financial or tax advice. So whenever you trade, always keep that in mind, right? Because I don't want you guys coming at me to sue me and say that I'm giving you financial advice. I'm not giving you financial advice, right? So now that is clear, let's move on to the next name that I wanted to cover. I think that was Steel United. Let's see, Steel Dynamics. Yes. So another breakout. As you can see, the theme for today, we are just nicely looking at a breakout. That is where we are at. We are looking at a breakout. Let's see what I want to share. Okay, yeah. So now we are looking at breakouts. I like breakouts, even though they fail, but at least they are showing you that there are buyers that are pushing the share price. Never in this channel I will ever speak about a company that is falling. I don't buy companies that are falling. That is not my cup of tea. I know that there are some people that are comfortable with buying stocks that have a falling share price because they believe that it's a great company. The company is going to recover. We're not saying that the company is not going to recover, but as you can see now, some markets are falling, some markets are rising. We just want to be at a place where the stock market is rising. We are not interested in the falling companies. Those companies, let them fall, let them go to whatever low price they want to go to. As soon as they show sign of recovery, then we'll always going to be there. The stock market is not going anywhere. So when they start rising again, we will be there. We will be buying those companies and adding them into our portfolio. By doing that, we are able to reduce our potential drawdown. We don't want to have a large drawdown into our portfolio at all times. We try to keep our portfolio, or the equity curve, we try to keep it growing and growing. It's not always perfect. We use a stop loss. We do get hit a lot. We have a lot of losses, as you have saw or seen in the past. When we were sharing our 10,000 Rand stock trading challenge, we showed you how many losses we had. We showed you the profit and the ratio between the wins and losses. So we don't want to speak as if all our trades are 100% profitable. Well, they will never, nobody is ever going to have trades that are 100% profitable. And also we don't want to see that if now we are in a position where the share price is falling, and then we want to say that, okay, the stock market does this, is going to recover, blah blah blah. We don't want to console ourselves. If there are companies that are moving up like this, Steel Dynamics, that is where we want to find ourselves at all time. We just want to be there making that money, right? So now I'm just trying to see if I can access YouTube. If you have any questions, comments, suggestions, then you can start typing there. Then as I read your questions, then I will be able to respond to your questions. If there's a company that you want me to check, then I will check that particular company, right? So now I've just looked at this phone, another phone, so that I can see the comments as they come. So please guys, those that are here, that are watching, any company that you want me to cover, to go through over the chat, or maybe to try to find some information, just type in there. As the companies come, your messages come, then I'll be able to cover that particular company. So, but yeah, what I want to apologize for, especially the people that were here at 2, is that we lost internet connection. Then it wasn't easy for us to continue with the live stream. We see now we only have about 5 people, meaning that the other 20 plus people, well, because they lost interest since we were not there, right? So such things do happen. So if you have any questions, just type there. As the questions come there in the chat, I'll be able to answer. Well, hopefully I'll be able to answer your questions. But you guys, you can also ask difficult questions. Okay, so I said that Steel Dynamics, it's on an uptrend. That's the reason why we are buying it. We're not buying companies that are in a downtrend. So let's look at some of the companies that have worked well for us in the past. We're looking at Satrix. In fact, we are bullish on the South African financials. So we bought Satrix Fini ETFs. We don't just trade stocks alone. We also trade ETFs. We try to max our tax-free savings account whenever we can. Remember, money is not always going to be there for us. So we're also looking at the breakout here for Satrix Fini. At some point, Satrix Fini was falling before it started to go up. We didn't buy at the very bottom. Well, we don't have that lack of buying the stock at the very bottom, and we're not going to pretend as if we always buy stocks at the very bottom. Okay, I see that DJ is asking for Old Mutual. I will check Old Mutual for you, right? So now we saw that once the financials were pushing, they were up there. Then we started buying Satrix Fini ETF. We started buying most of the financials. Remember, under financials, we've got the banks, we've got insurance companies, some real estate investment trusts are listed under financials. So all those companies were pushing up, and they were able to push up the share price. And then another company, the problem with Old Mutual is not a problem per se. It's because there was a time where they were trying to unbundle NetBank. So I don't know how that move worked, but as you can see, we've been waiting for that stock to crack up. It attempted to move up there. I think that was somewhere around 15 rand per share before it started to trade lower. Then we exited our position. It then gave another potential buy signal, which also quickly failed there. We exited our position as well. At this moment, I don't have a position on Old Mutual. The only time that I will have a position on Old Mutual, even though it's been trying to trade above this level and it has been failing. So once it starts to trade above 14 rand per share confidently, being serious about it, I do note that the volume there was a bit higher. Maybe this week, if it can close above this level, then it would be interesting. Then we can start buying some Old Mutual. But the reason why we didn't buy Old Mutual, even though they unbundled Nedbank, they still get a bit of a relationship. If you look at the chart of Nedbank, that is where we are having a position, and that position is just working up nicely there. So sometimes if their companies are related somehow, we can look at the other company, trying to find an alternative so that we can have a better chance of making money, because the end goal of being in the stock market is to make money. So we don't want to sit with a stock that is not going anywhere. But the nice thing about Old Mutual is that it does pay nice dividends. There were times where they were talking about dividends. So for the people that hunt for dividends, whatever reason why you were buying that particular stock, some people, they just wanted to buy it because, remember, there was an announcement that was made somewhere around the 15th of March, and then the dividend is coming somewhere around 23 May. So some people, they're interested in the stock because of that dividend. They're not necessarily interested in the company. For us, whenever we buy a company, it's a combination of many factors. The stock has to be in an uptrend, and also the stock, if possible, it should pay dividends. But dividends are not the main key thing. The main thing that you're looking for is for that stock to be trading in an uptrend. So what we say at this moment, the stock is still a consolidation, is still in a consolidation period. So for a long time, we're not gonna start trading Old Mutual. I just wanted to shift that a bit. If you look at this range, you can see that the stock is in a consolidation. So for the only time that we are going to be interested in the stock is once it starts to trade above this level, because the next stage that we are anticipating is that the share price is going to start to continue to trade further up. We don't want a stock that are in this particular level. To us, this is just a dead stock, but that is my opinion. It is based on chart analysis. If you are looking at other factors, the other factors could be indicating that it's a good company to buy. Babzwit, Anglo-American. Zwide, there are so many Anglo-American. There is AMS, there is AGL, so I don't know which Anglo-American you are referring to. If you can just type the one that you want, because there's this Anglo-American Platinum AMS. We did have a position. The nice thing about this position, it benefited when that conflict started. You see, when there was this move up there, it just quickly went up, but platinum at that time was strong. In fact, all the metals or the metal commodities, they were strong, but those gains, if you didn't keep them, most likely you would have given them back. But before that, the stock was in an uptrend. If the share price can continue to be on an uptrend, then we can expect Anglo-American Platinum to continue trading up. I know that TradingView has closed some of the stocks that you can find there. I'm just trying to see if you can find a platinum futures. So okay, you see a platinum futures. As you can see now, the share price or the price of the futures is trading below the 200-day moving average. At this moment, I wouldn't be keen in buying a platinum, but that doesn't mean that the platinum stocks are not attractive. Okay, Ndumiso just confirmed that well, I'm not sure about the gender, but it's AMS that you are looking for. Sorry about that, Zwite. I don't want to use the incorrect gender. So yeah, well, Anglo-American Platinum itself is attractive, but platinum is not attractive. And Anglo-American Platinum is focusing mostly on platinum group metals, even though they might have other stuff. Their focal point is platinum group metals. So if you look at AGL, I have a position on AGL. So let's see what's there in AGL. The reason why I bought AGL is because Anglo American Platinum, Kumba Iron Ore, Impala Platinum, those companies are part of Anglo American. So this is Anglo American PLC, AGL. So I bought AGL when it broke above this level there. That was a nice entry, and then we saw the conflict. It quickly pushed up there. Then we were able to lock in some of the gains quickly. Then the stock market started to recover. Well, we didn't try to exit before the stock market, it crashed a bit. Not that it crashed, it was just a pullback. We were not predicting that it was going to pull back. Every time the stock market, what we want to see in the stock market, we want to see the price going up and steady. Then one day, boom, it just goes up quick. Well, that's a gift to you from the market. You just want to quickly exit that. Don't try to be greedy and hope that the next day or the next weeks the share price is still going to continue to go up, because once it starts to just fall back like it did here, then all this money that you could have made, then you would have lost that money. So you shouldn't try to be greedy. It's nice to pocket as much profit as you can, but if the market gives you one quick move, you just need to run with that money. That's what I can share with you. That is my experience with the market. I don't want to sit forever if there's an element of luck, but as it is, when it started to come back to the breakout level, because now on easy equities you can set a buy stop, you can set limit orders. We had the limit order somewhere around 720 rand per share. Then as you can see last week, it closed, well, it didn't close below, it traded below 720, meaning that it triggered our trade. Then we were at a loss for a while, and then now the share price is somewhere around 719 rand. So now we are still at a tiny loss there, but now we do have AGL. We did have it previously. We sold a portion of AGL to lock in some of the gains. Fortunately, we were not predicting that this is what was going to happen, and we're not planning that this was going to happen. When it happened, we just quickly reacted by saying that, okay, because this was the previous resistance level, the price is still on an uptrend. Even if it comes back, we hope that it can find support at that previous level there, and then it did. So we got in there. So with the current position that we have, somewhere around 720, our stop loss, I think it's about 680 or 690. So our short-term target, all the shares that you bought with that limit order, we are going to sell them once we reach 850. Then we are going to continue with the first tranche of the shares that were remaining. The ones that you bought earlier, we sold the portion. We're just going to allow those to continue to run. Okay, just want to read your second message. Yes, well, the thing is, it's difficult to say what the conflict is going to affect. One day it's on wheat, another day we're speaking of coal. There was a day when coal, I never ever traded coal before, but when the conflict happened, we saw there are different kinds of coal. I'm from Newcastle. I was surprised to see that there's some Newcastle coal. So you see here there's a Richards Bay strip. Let's see. Okay, there's this Newcastle. So I don't really know which coal people normally trade, right? Because you can see there's Newcastle coal in the futures, Newcastle coal futures. So let's go with this one. It's a futures market, so it does break out at some point. If you look at the price of coal, this is what happens in a conflict. Not to say that it will always happen, but this is what happened with this particular conflict. You see, coal was nice and moving up steadily, and then it crashed here. We don't even know what was the rationale for the coal to crash. Then when that escalation started, coal break above 240, it's US dollars, is priced in US dollars. It went to about 440. That is almost 100% run on that particular a week. Remember, we said that ideally the stock price should go up nicely, but once you see the share price bump up a bit, sometimes it happens, especially in a lower time frame, maybe in a matter of days, you can see the candles stacking up nicely, but on a weekly this is just too wide. It's the same thing that we saw here happening, that the share price it quickly crashed. But since we're not trading the coal futures, the position that we had, and we have since exited that position, not because there is something wrong. I see. Yeah, coal was also on fire, and Dumis was also from Newcastle. Well, we are probably relatives because I'm also a Nxumalo, right? So we had a position on Tungela. There are brave people that benefited a lot in Tungela. Over the long run, Tungela has just been going up. I missed, I didn't buy Tungela when they were coming with that IPO. Then it reached about 100 Rand before crashing, pulling back to about 60 Rand. Then we waited, we saw this candle close there. That's when we bought Tungela. We hold Tungela. When it started to move sideways here, we exited. It was a knee-jerk reaction. It's one of the trades that I regret, even though I made a bit of money. I exited. Then after a while it broke above this level. Now after this breakout, everything happened so fast, because when it broke above 100 Rand per share, it quickly went to 120, so we couldn't get an entry around 120. Then we started to plot another consolidation level, and then we waited. When it closed somewhere around 120 something, that is when we jumped in. Fortunately, when that call, everything was happening, I think it's either we exited at 156. Yeah, I think I exited at 156. So I don't have a position on Tungela at the moment. There's nothing wrong with the company. They're also going to be releasing result this coming week. I'm not sure if it's Tuesday, but they are coming up with result. Remember, Tungela is sitting on a large pile of cash, so it's possible that they will be paying a fat dividend. That would be nice. I'm sure investors will be happy if Tungela can pay a large dividend. So what is happening now, we have this box here, this consolidation. Obviously, if it falls below this box, we are not buying. We already don't have a position, so we wouldn't be buying. But if you have a position, you just need to keep an eye on this price. Once it trades below maybe 145 or so, then most likely it can come and test 120. So if you have a position, that would mean that your position would be at a loss for a while, unless you are sitting from a large profit from this level there. Okay, so what we are planning to do with this particular position, we have a buy stop order somewhere around 180. If it close above, not necessarily close, if it reaches this level, maybe let's say 181, 182, then we get in, we buy those shares again. On the weekly time frame, we would want to have our stop loss here, but you can see the stop loss is wide. Maybe we will just dial into a smaller time frame like the daily chart, so that you can try and establish a nice stop level closer to that level. But you can see 140, that is where the support level is at. So if it breaks above this level, depending if there's maybe a nice tight consolidation somewhere here, then we can have our stop loss below that consolidation. At all times, we are just trying to reduce our risk that we are taking. We don't want to expose ourselves too much, so that is why we are able to bounce in, checking the daily and the weekly time frame, trying to find better places to set our stop loss. Okay, so yeah, let me see. I see that there's a message from DJ, what he was saying there. Okay, no, you are welcome there on that. Okay, anyone with a question, if you have more questions, just keep them coming. I'm not rushing anywhere today, and the network now it's a bit stable, so I'll be able to answer as many questions as I can. Right, so on the topic of coal companies, we saw Exaro. Still, we are stock traders. Well, we do invest in the stock market, but we are stock traders, so we don't have positions to say that we are going to hold on for life As long as the position is paying us, we are happy to stay with that particular name. Once the position stop paying us, then there's no need for us to continue to stay with that particular name. So since we exited Tungela, we started to look at other low risk, high probability setup in the coal sector. So another company that we are looking at this moment, we don't have a position yet, is Exxaro. As you can see, Exxaro is now trading above this previous resistance level. I wonder how did I plot this one, because it's not even covering this level, but you see there was a bit of a pullback there. So you can have a stop somewhere around 190 rand. Then obviously now the best place to buy maybe was somewhere as close to 200 as possible. So now if you buy here, the risk is just going to be large. There is no need for you to chase the stock, because now it's closer to 230. Even there 230, if it does not break above this level, it will mean that you are just sitting on a losing position. I will answer your question now, Ndomi. So I want to share the chart of Teresa. We also took a position on Teresa, but now I'm starting to, there's nothing wrong with Teresa, but I feel like the cash is just sitting there, not going anywhere, and they are better set up in other stocks. So what we're looking at with Teresa, we were looking at the weekly chart. So you see the share price broke above this level. Our stop loss is somewhere around 30 rand. Fortunately, it didn't trigger, even though it came back. It came to about 30 rand 20 cent, and our stop loss, it's a hard stop at 30 rand, so we didn't our stop loss wasn't triggered, so we are still in that trade. But now if you go to the daily chart, then now trying to find another opportunity. The best thing to do if you don't have a position is maybe to wait until the share price is back above 33 rand. Then you can buy and have another stop loss somewhere around 30 rand per share, anticipating that the coal miners are still going to continue to push further up there. So we are not worried about this position at this moment, unless it trades below 30 rands. Then there's nothing we can do there, because we have a hard stop. Okay, so let's see. How do you confirm a retest after a bull run? Well, it's not so easy to confirm the retest, but I will just try to illustrate what happens. So whenever the stock market is trading, let's say the stock market has been trading in the range, then now, because it's going up and down, unless you are trading support and resistance, you just want to sell the support, to sell the resistance and buy the support. What you normally do, because we don't mind holding these companies as long as they work, then we plan to say that, okay, the stock we see is trading in a range. Once it breaks and then it closes above the range, then that is when we are going to buy, and then we're going to set our stop loss just below the resistance level, right? So once that happens, there are two things that can happen, right? So I just want to draw the range there. The one scenario, the stock break above the resistance level, it comes back to retest it, right? If you miss buying at that breakout, you can buy the retest, but first you have to wait for the stock market or the candle to close above this level. That will be your confirmation. Then if you look at the volume, at least it should be a green day. Then you can buy with confidence and then set your stop loss somewhere there. And then it means that you're anticipating that the share price is going to continue to move further up. But it's not perfect. The stock can break above. Instead of coming back to retest exactly at the breakout level, it can undercut the resistance level and then start to move up there. So if you had your stop loss somewhere here, your stop loss could be triggered. Now I see that was a bad choice of color, because I don't even see what I was drawing. Let me use another color. So it's a breakout, then instead of coming back to test this level, it undercut that level before continuing with the breakout. And then if you had your stop loss somewhere there, it means that your stop loss is triggered. You just lost money, and the market continued to move in the direction that you're expecting it to move. These things happen in the market. There's nothing you can do about it. We don't know which breakout will work or which breakout will not work. And then sometimes if you are just unlucky, it's just a breakout that just goes up. It does not even give you a second chance to try and get into that particular market. So there is no one perfect way how the market is going to work. Okay, I was noticing that now we are dropping some frames. It seems like the frames are stable a bit, so let's give it another 15 minutes and see what is going to happen. Right, what's my take on African Rainbow Capital? Well, there's nothing. Well, I covered, we had a video where we covered African Rainbow Capital. Let me see if I can get that video, at least the link to that video, so that you can see while we are waiting for that to load. For those that don't know, we have a free simple guide to stock market investing. You don't pay for it, you can get it for free. I will leave the link there. You can just go download, make sure that you put 0 and then you put in your email address, then you will get that ebook. It will show you different kinds of asset classes in the stock market, the relationship between risk and volatility. You will know the difference between growth and dividend stocks, and then see how you can use a stock market investing to beat inflation. And then also we shared some resources, free resources that you can use to find information about ETFs. So just make sure that you get yourself this ebook. You can see it already has a 5-star rating. It means that people are happy. Even though the ebook is free, there are people that were kind enough, they paid for the ebook. We mentioned that if you can pay $5, then we have an exclusive Telegram trading group. Then you will have access to that group for 2 months. It costs $10 per month, but you'll be able to join it for free for another 2 months. So just by paying $5, you can actually access a product that is worth $20 there. So going back to YouTube, I just want to find the video that I had at that time. Let's see, my channel there, videos. So we had a video previously how to buy time bank shares, because people are interested in buying time bank shares. I'm just trying to find that video. Yes, okay, that was 10 cent, how to buy time bank shares. So Tabo, if you want a more comprehensive analysis on African Rainbow investment, going a bit in depth, just check this video there. If you search how to buy time bank shares, if you can just remember how the video looks like, you will be able to see it. But now let me just answer your question based on the chart. We saw that they reported the market was happy with whatever that time bank, or not time bank, why am I calling it time bank, what African Rainbow investment, what they were talking about. Let's see. Okay, I will share the link. No, I will leave the link in the description. If you go to some of our recent videos, it's already there in the description, the link. Let's go to auto, yes, so that you can see. Right, so that is where we are. The stock hasn't traded much. It started trading just before the end of 2017. And then, well, for the people that likes to buy IPO, they were underwater for quite some time, and then we see that the stock then consolidated. There were instances where we're talking about buying African Rainbow investment when we made that video. Well, we didn't make the video in 2022, but the best place to buy African Rainbow was somewhere around when it was trading at 4 rand. That was just before the end of 2021. Then we saw that it broke above this level, then it came back to retest this level. I think that is when we made the video, when it was trading between 5 rand and 5 rand 50. So as you can see, the share price is pushing up. We expect it to come back and trade above 7 rand 50 per share. And if it does trade above 7 rand 50 per share, then it means that we can expect African Rainbow. Yeah, I don't know why they called it African Rainbow Capital Investment, because it's confusing. But if it does start to trade above 7 rand 50 per share, we can expect that uptrend to continue to go up. But remember, we trade stocks for different reasons. I'm not necessarily interested in time bank per se. The business itself is good. well, I hate rain. We are using rain. That is how we lost connection in the previous live session. Rain is problematic, but it depends where you are. But the other businesses, they are good. We saw one thing that I noted on the recent result is that they are sitting at about 500 million cash, but they have a debt of just a bit under a billion. It's not a problem, because if they have a cash of 0.5 billion and they are in debt 0.9 billion, remember they still have other assets. But it's a good thing that they are sitting on cash, because they can use that cash to pay the debt, or they can use that cash to expand the business, or my favorite, they can just give that cash back to shareholders in the form of a dividend. These things, they happen. Let me see if I can share the copy on this. Yeah, because now I'm just using a different thing. Let's see. Okay, I don't see the option to share the link. Well, I will leave it in that description, because now you see the link that is there. It's just a different link. Yeah, so I will share the link once we are done with this video. It will be easier that way. So yes, to answer your question there, Tabo, I'm bullish on African Rainbow Capital Investment, even though I don't have a position. Remember, there is no need for you to buy, well, not necessarily you as a market participant. There is no need to jump into each and every stocks into each and every stock. There are better stocks than the other. I'm not saying that the stocks that I'm holding are better than African Rainbow Capital Investment, just that my portfolio is already full. I don't have a space. I don't like to buy companies because I like them, or buying companies for the sake of expanding my portfolio. Every position that I have in my portfolio need to be at least 5% of my total value, because if you just put in, let's use numbers, not percentages. If you put in 100 rand in a company, and then the share price of that particular company grow up by 100%, your 100 rand has grown to 200 rand. Then depending on how you feel, that 200 rand might not be, or that 100 rand profit on your 100 rand investment, it might not be a lot. So for me, it's important that whatever investment I'm making, the amount that I'm investing is reasonably good enough, so that if the stock goes up 10, 20, 30%, 50%, 100%, even the return are nice. And also if the company pays dividends, because remember the dividend is per share. So if you have 5 shares and the company pays a dividend of 50 cents, it means that you are getting 2.50 rand. That is before tax. Once they put tax into consideration, then it means that you'll be getting 40 cents per share, and that goes to about what, 4.8. Okay, that goes to about 20 or 2 rand. So now you'll be receiving 2 rand from that investment. So you wouldn't be that happy. It's nice you are getting dividends. You can reinvest those dividends, but try by all means, if you can, to put a reasonable amount in your investment, so that whenever you make money, you are also happy about the return that you are getting, and also you are happy about the dividend that you are receiving. So since I don't have a lot of cash, free cash in my portfolio at this moment, I wouldn't be buying African Rainbow Capital. But that is not a reflection of the company. The company is good. I like the company. Right, now let's go to Afrimet. Let's see. Okay, you were saying that ARC is moving away, it's focusing on financials, and it's moving away from Afrimet. Well, I mean, African Rainbow Capital also owns African Rainbow Minerals. Maybe the one of the good thing that they can do is maybe to put Afrimet and African Rainbow minerals in that portfolio. I know that Afrimet is a separate company. It's not owned by African Rainbow, but that's where they can put it if they want to focus on financial services, right? Because, well, if you look at the business of Afrimet, it's completely different to the business that are found there. But remember, African Rainbow Capital Investment, it's a holding company, so they don't really have a specific sector that they are focusing on, but they can always decide that now they want to focus on a specific sector. As we mentioned that they want to focus on financial services, but yeah, that is just my 2 cent opinion. So let's see what does the Afrimet looks on its own. Remember guys, if you have questions, just keep on sending those questions. Mina, I've already done the stocks that I'm interested in investing, so I've shared some of them. If you go to YouTube, we had another video live that we made earlier. We covered Redefine, Omnia, and then we covered Miraf as well. So if you want analysis of those companies, do check that video as well. So now when you look at Afrimet, we noted that it attempted to, well, it traded around 60 rand per share before coming back to trade around 48 rand per share. Fortunately, it has broken above this level again, and then it's trying to move up. But what you see here, it's a lot of red candles. All these red candles, they do not inspire confidence in the stock. There's nothing wrong with the stock. It happens, the stock goes up, it builds a base, then it breaks above that base, and then it goes up, then it builds another base before it breaks up and then build another base. So maybe it could be building another base. So we would be interested in Afrimet once it starts to trade, maybe somewhere around 70 rand per share or so. And for us, yes, you are welcome, Tatu. So we do try to plan our trades just before the stuff happens in the market, because then we are able to set up, identify our trade levels. To us, trading simply means that predetermining where you're going to enter a trade. We want the market, we say that if the market does this, this is how we are going to react. If it does that, this is how we are going to react. So again, I don't have a position on Afrimet, but if it starts to trade above 71 rand per share, then I would definitely be interested in Afrimet. But I already have a whole lot of stocks in my portfolio. That is why I'm able to miss some companies. If there's someone that trades US stocks, the ones that are interesting us at the moment, we spoke about NVIDIA. In case you missed our early analysis, we spoke about NVIDIA. We said that NVIDIA broke above this level. You can see we already have a trade there. At this moment, the trade is on profit, but that is irrelevant. What is relevant is the why. Why did you buy that particular company? Because sometimes people ask on social media, why did you buy a certain company? We mentioned that NVIDIA was moving up nicely before, well, all the tech companies were under pressure. Then it found support somewhere around 200 US dollars. And then when it started to trade above the 200-day moving average, that is when it caught our interest. We were able to get in at about 248 US dollars. The position is on profit. We are targeting this previous high there at the moment. So if the share price does push up there, then we might be able to make a bit of money from that position. But if it doesn't, then, well, we do not control what the market can do. We are still bullish on energy stocks, as we have been bullish. We said that we made a lot of videos where we're talking about oil and gas, we're talking about metals and mining. So when the conflict in Russia started, all those sectors, they were just they started to move up, because we had large positions in those sectors. We were able to make a bit of money. The sector that we are now heavy on, that we are bullish on, is financials. We saw that we shared the Satrix Fini chart. We mentioned that we're buying when it broke above, I think it was around 14 rand, the net asset value of the ETF. We are bullish on financials. Well, I've just said that in the US we're expecting the tech to recover, then we're going to start buying the tech companies. The property sector, that one is disappointing us. We've been bullish since just before the end of 2020. Some of the property companies in South Africa, they did make some money, but if you read the news, you will see that some of the companies, they decided to go to Eastern Europe, because they identified Eastern Europe as an emerging market. unfortunately, that is where the conflict is currently at. So all the companies that have exposure in Eastern Europe are really struggling. Those share prices are struggling to move up. But in addition to what is happening now in Eastern Europe, remember, we still have coronavirus. Some people are working from home, meaning that all those companies that were providing rental space means that at some point they had some vacancies. The nice thing to see with those retail estate investment trusts is that they are reporting improved occupation rate, meaning that the vacancy levels are decreasing. So we spoke about a redefine and hyprop, even though we will not be buying Vukile in our portfolio, but we noted that Vukile and Resilient are also moving up nicely. The only real estate investment trust that we are aware of that is not moving up nicely is Growth Point. So we wouldn't be taking a position in Growth Point, despite the fact that it's in the JSE top 40, because we are not just chasing a large company, we are just chasing a company that can make money for us, generate profit, and pass some of those income to us. Right? Any long-term dividend stocks portfolio or stocks in my portfolio? Yes, ShopRite. That one. I have ShopRite there. It is my star performer. I will be making a video giving you guys an update on the dividend stocks. Previously, I think the last video that we had, I did give you an update. I think at that time I was selling some of my Sasol shares in order to buy, let's see. So here we're looking at the Sasol. We're expecting Sasol to go up. I gave an update on my dividend portfolio. Then here we're buying more mining shares. We still had more Sasol. Here again we're adding more Sasol. Novas Holdings, I don't think that we bought more companies. Let me just try and see. So this was the last dividend portfolio update that we gave. So yes, we definitely, okay, here, okay, no, here we're just selling shares. So if you go to this dividend portfolio update, you will see the companies that we have there. But just on top of my mind, the companies that I have in my dividend portfolio, I have ShopRite, I have Remgro, Pepco. Well, I'll be adding more Redefine. I have Redefine, Anglo AGL, Anglo American PLC. I also have that in my dividend portfolio. There are some companies, because I was looking and then updating some of the rules, that companies that I'll be adding. I had First Rand, but First Rand, we exited that position. We shouldn't have exited that position. But now, instead of adding First Rand, remember Remgro owns about 30% of First Rand. So we have a Remgro position. Remgro has exposure in First Rand. So we have exposure indirectly in First Rand. We'll be adding Omnia. We don't have Omnia yet. And then we'll be adding, we already have a position in Invicta. Invicta does pay dividend. It's a small, well, it's not a small, it's a large company. It's just that the share price, it's around 30 rand per share. So sometimes it get lost there. It's not part of the top 40, but I think it's part of the top 100. Maybe it's not even part of the top 100, but it's an industrial company that consistently pays dividends, whether there is corona or not. Producers, manufacturers, the business must go on, so they still buy those small parts. So we love that company. We like to have that company in our portfolio. And then we'll be adding a bit of Sanlam because we are bullish on financials. And then also we'll be adding Vodacom. Vodacom has been moving up nicely. MTN did well. Vodacom is a consistent dividend payer. It's a boring stock, but it's a stock that brings you money in the form of dividends. Right, my analysis on Prosus and Naspers. I don't have Naspers and Prosus in my portfolio simply because those companies were on a downtrend. I don't hold positions that are in a downtrend, even though we saw last week it started by falling before recovering. You see, ever since it started to trade around below 3,200 rand per share, we haven't had exposure on Naspers. And fortunately, because we exited we missed all that move to about 1.6. So that's about a minus 50% drawdown since it started trading below 3,200 rand. But there are people that have a position on NASPAS and process, so we do talk to people from time to time. What happened is that every time it break lower here, well, the best case was to exit maybe somewhere around 2.6, but some people, they didn't exit. So what happened last week, it only gave us an opportunity to cut some of the positions that had NASPAS. We don't have NASPAS in our own portfolio, but there are portfolios that we know that they had NASPAS. We are not necessarily super bearish on the stock. The company is still strong, as you saw that we have this level here that we are keeping an eye. So as long as it remains above 1.6, okay, we're still not buying it, but 1.6 at least it tells us that in the short term or in the current period it's not falling. Once we see it trade above 2,000 rand per share, there's going to be a bit of hope. But this 200-day moving average is still going to act as a resistance level, because we still want the stock to break above 2,200. Once it's above 2,200, then there's this moving average, wherever it's going to be at that particular time. So as long as the stock is trading below this green level, we are not touching that stock. It doesn't matter whether people buy it here and then they would have doubled or tripled their money. I mean, we said that there are companies that are in an uptrend, so we're not going to focus on the companies that are falling. And then it's the same thing with process. Even though there was a time where we shared a process swing trade, that one, it faded quickly, and we did have well, I don't want to open the process in Netherlands, I want to open it in the JSE. So we were planning to go long. In fact, we did go long on process, but it quickly failed. The reason why we wanted to go long is because the share price closed above this level here. Then we had a stop loss somewhere around I think it was 1.2, and then it quickly broke below that level, that 1.2. So we exited. By exiting here, it means that we're able to avoid all this pain going to about 600 and something. So for us, it is important that we avoid all these large drawdowns or potential drawdown. Tomorrow it's Monday, JSE is closed. I think the Hong Kong stock market is going to be trading. So tomorrow we'll be interested in seeing what does Tencent does. Remember, Tencent is the Chinese company where they have invested there. Let me just close this volume so that the chart could be a bit clear and clean. So last week, one of the reasons why we exited process or NASPAS around that level is because Tencent broke below this level and it has been falling down. Whatever happens to Tencent, it also has a direct relationship with NASPAS and process. So it broke below this level. We were not even there, so we missed that move. And then when it came to about 320, because of this level, we were anticipating a bit of a support, but that doesn't mean that we were buying. We are still sitting on the side. So again, until Tencent maybe is trading above 480 Hong Kong dollars, it's in Hong Kong dollars, then maybe that is when we could be interested in Tencent, not in Tencent, in NASPAS or process. But at this moment, we are just sitting on the side. Well, in our tax-free savings account, we do have a position in Satrix Top Vote. So by force, we have a position in NASPAS and process. There's nothing that you can do because they are still the large companies in the JSE, right? So yeah, you are welcome, everyone that asked, and thanks to everyone that was here with us today. It's about what, 16:27. So if there are no questions at 4:30, I'm just going to wrap up. Thanks again to everyone that pitched in. I don't know next week Sunday if we are going to have a session, but also seeing that the internet could be a challenge, we will try to plan around the internet and see if we can find an alternative internet that you can use so that you have stable internet connection. But at this moment, I think we can wrap it up here for today. Remember, guys, don't forget that everything that is shared in here is for educational purpose. Nothing is financial advice. I don't want you to go buy and sell stocks and then the stocks start to turn negative and then you come back saying that you were misled. Okay, let's see. Let's quickly go to Standard Bank and Nedbank. Right, Capitec is overpriced. Ish, my brother. I hope that you're a gentleman. Mina, I don't do overpriced stuff and all those things. For me, it's either the share price is going up or down. That's all. So Standard Bank, we are bullish on Standard Bank. We have a position. It's a reasonably big position. The position is on profit. We are happy with that. It's on profit. It hasn't triggered our stop. We bought Standard Bank after we exited our first rent position. Then we went on to look for another low risk high probability setup. We found it on Standard Bank, so we have a position on Standard Bank. Standard Bank is also a company that pays nice dividend. We also had a position on Nedbank that we exited prematurely because of an overreaction. So with Nedbank, we bought this breakout here. We were able to go up a bit with Nedbank. Then last week, not this recent week, the week before that one, it snapped back a bit. Then we covered our position there for a small profit. So we wanted to buy more Nedbank once it starts to trade above this level. So now it's at 228 rand per share. We can still buy with a stop loss just above 200 rand per share, then maybe targeting about 208. That will be a reasonable risk to reward. Maybe we can consider this position for a short-term trade, but at this moment we don't have a position on Nedbank. Capitec, we love Capitec. One of the reasons why we love Capitec, obviously, is because it keeps on going up. So we love Capitec for that particular reason. We did share a trade. I think it was on TikTok. We are also on TikTok. So we shared a trade when it broke above this level. We had a stop loss there, and our target was somewhere around this level. So for the people that took the trade, we were able to make money from that position. Now the problem at this moment is that this candle is just too wide to set a stop loss. If you want to set a stop loss, it will be below 2000 rand. So I just want to see what's the price at this moment. Let me shift it a bit. So the price is about 2211 rand. Right, so maybe if you go to a smaller time frame like the daily chart, then we can try to find a reasonable level. So if you buy a breakout, well, we can set the stop loss here. It's just above 2000. I think it's 2050 rand. That's where the stop loss is at. Then we expect the share price to continue to go up there. Then we'll be able to handle that risk. That is reason number one of buying Capitec. It's because of the chart setup. And then the second reason why we'd be happy to buy Capitec is because there are people who keep on saying that Capitec is overpriced, is expensive. Well, we're not fundamental analysts, so we can't give you an opinion on the value of the business because we can't go in and do all that fundamental analysis. If you can do it and you arrive to that conclusion that it is overpriced, then you can make a decision based on that knowledge. From our view, technical setup, it's good. We are happy to buy Capitec as it is. It doesn't matter what price we pay, as long as we are able to identify the amount of risk that we are willing to take. We can buy at 2200, set a stop loss at 2050 rand, so that's about 150 rand loss per share. If you are comfortable with 150 rand loss per share, then if in future we are able to sell our Capitec shares, whether 2.3, 2.5, we will have made money irrespective of the fact or opinion that Capitec is overpriced. But that is our approach to the stock market. So that's it. Hi, Sharp Tato, you are welcome. Zwidekalang, yes, we will see you. Will keep this coming. As much as the internet, it's a problem now, but at least now we have a much more stable device that allows us to stream without any technical issues besides the network issues. So we'll be having a lot more of these live sessions. We'll be uploading more videos because now we are comfortable. We can just quickly generate material, process it a bit quick, and then put it on the YouTube channel. So assuming all you guys have already subscribed, so click that bell notification so that every time you upload something, then you can see the videos as they come. You don't miss them. For those that haven't subscribed, please consider subscribing. We've got more content coming. This year I'm trading a lot of the US stocks, so I do cover the JSE companies, but I'm also covering more and more of the US stocks because that is where I'm mostly trading this year. So thanks to everyone that was here today. I will see you on the next session. Well, I don't want to say for sure that next session is going to be next week Sunday. Anything's possible. Right, I will see you on the next session. Sharp.